Welcome back, everybody, to the daily show where we discuss and do technical analysis on big mega cap stocks. So before we get started, please smash that like button, and 100 plus likes on this video would be greatly appreciated, guys. And if you're new here, consider subscribing. Now, if you want to support the channel and get my daily trade ideas, my swing trade ideas, live trading, and all kinds of setups, definitely check out their link down below in the description for Patreon. And now let's get right into it, guys. Welcome back, everybody. So before we get started, don't forget to hit the like button, guys. Smack that like button, and we need those 100 plus likes on this video. And that's the only way you can support the channel. If you're new here, definitely subscribe to it for more contents. Now, here on Apple stock, down with that news this morning on new iPhone sales, 2.78%. And we did not see Apple going back up to recover those losses, and now down by almost 3%, trading under this range, which is at 217, and trading under lower Bollinger Band, also sitting at 217. So now that's going to be a resistance to watch at 217. Over that, we might see Apple going up to 220, and maybe fill this gap at 221.91. Over that, we can talk about more upside, but the trend is down on Apple. Now, Apple cannot get up to 220 and cannot get over to 17. In that case, the way it's sitting, it can come down slowly all the way to 7, and from there, especially with FOMC, it can go much lower this week. So we might get back up to the upside to close this gap. This could be a nice trading idea right here, as long as you can get over to 17. That won't happen. Expect more downside here on Apple stock, easily down to 207. On Amazon stock is down 0.86%. So if you're looking to trade this market, especially today and tomorrow, until FOMC, it's really hard. Today was bunch of chop. I try to stay in cash, not really go into anything big. Made a little bit of money early in the morning, but it was really hard. It was really hard to make money because the move was really small and it was just shopping back and forth. So people that are trading for a long time, they don't go and actually try to buy anything when there is a big event coming very soon. And we know that rate hiking cycle that actually took place from end of 2021 into 2022 bear market and all that finally coming to an end, or at least we're starting to get a rate cut. So nobody knows how the market is going to react, but if you look at the history, usually rate cuts are not bullish, guys. Now also keep that in mind in this market, especially in this situation, the way the market is running in last few I would say months to maybe even 2 years. Rate hiking was also bullish. Now rate cuts are bullish. So nobody knows how market is going to react to that rate cut. Whether it could be 25 basis points or maybe 50, and what's the next indication, how they're going to approach this. So there is a lot of things happening here in this market, and especially for a day trade, it was a really bad day because basically it was just moving back and forth, not really going anywhere. If you look at Amazon, something here on Amazon, that 183.36 and upside was 185. So it was basically ping ponging in between a dollar, $2 range right here. You can really make that much money. You can make small profit, you can scalp, but this is not ideal area to go and buy long or go and short, especially with FOMC coming up. So if you traded today, you made money, kudos to you. It was really tough out there trading today. Now, Amazon, you can see came down to where? Well, the 5-day moving average now sitting at 184.49. So it's holding pretty much over this 5-day moving average, and there is support at 185. So I would say 185, you'll line this in for tomorrow. Only if that gives up, look for 180, and then maybe down here at 177.88, rising 20-day moving average. As long as Amazon can actually stay over 185, this gap will likely to get closed near 186, and over that you'll see a move up to 190, and then this gap comes into play, 192.24. On AMD, it's absolutely flat on that day, and if you look at my screen, we came really close to 50-day moving average, did not touch exactly 150, but it was there, went back up, and now trading at 152, pretty much flat on that day. So there will be strong support at 150, 148, and below that, 13-day moving average right here at 144.46. Under that, you will see a flush down to 138. But this is actually a breakout, so watch out. As long as AMD can hold over 148 to 150, these moving averages right here, this thing can make a move back up to the upside all the way up to 161.52, and from there maybe even 164, and then we can talk about this gap here on top at 174.53 on AMD. On Meta, it's up 1.75%. So Meta again, Meta today was on top of my list today to get into Meta. And it actually came down same as Friday, guys, 217. So I don't know why I'm not actually buying because of this gap. I think there is better opportunity, gap fill reversal from here. But this thing was really close. Again, did not touch, even though I had it on my watch list just for like $2-3. I did not get in, and look at the pump today. Insane pump back over 531. Now technically it's looking extremely bullish for a move up to 538 early as tomorrow, and over that maybe even a brand new all-time high, or at least retesting previous all-time highs, 542 to 544. Now, if there is a pullback tomorrow, you line the sand 531, and below that, watch out for 520, and then this gap comes into play 513. On Tesla stock is down 1.52%, so Tesla came back down to exactly 50-day moving average right here. You can see right on my screen, it's sitting right here at 223.62, came back, held the support, went back up, and now trading near 227. So Tesla, this 50-day moving average, 223, that's going to be your line in the sand for tomorrow. Under that, watch out for right here, 218, and if that gives up, bottom of this range will be taken out here at 212. So that's going to be critical for Tesla, and this bear flag can play out. Now, also keep that in mind as we extend this bear flag here on top of this channel. If this thing decides to push even higher and gets over 230 to 235, easily can come up and close this gap 245.63. But again, we need to see how it's actually going to play out, especially with that FOMC coming up on Wednesday. So as the market hitting brand new all-time highs, especially Dow Jones, you can see Apple and Microsoft definitely not participating in that rally. I mean, Microsoft flat on the day. We got up to 433, Bollinger Band on top, not fully extended, so it's not going anywhere. We got a doji, indecision candle, and the move was really small on top. So this one here, if you look at my screen, if this is actually the real breakout, we need to hold over 426 top of this range right here where we got rejection before. Under that, you will see a flush down to 420, 416.57, this white line, 20-day moving average, and then critical support at 413. As long as we're over 426 on Microsoft, watch out for a push possibly up to this gap 443. On Google, stock it's up 0.39%. So Google, I'm still holding my calls, and I'm expecting a big move on Google stock, especially with FOMC. We might see Google going up to this gap 163.41, and that is my short-term target to take profit right there on Google. And so far, position is green by a lot, at least $8-9. So I don't care holding, Google here, and I think there might be more upside. Worst case scenario, we'll get stopped out at break even or some profit, maybe less profit than what I was expecting, but still it's a good position, and I think we can go even higher. Now you can see today 13-day moving average now sitting at 157, came back, retested, and then went back up. But I think as long as you can stay over anywhere from 155 to 157 after filling this gap, is still bullish, and this thing can move up to 162, and then this gap comes into play. That's my target, 163.41. Now, somehow we really see selling into FOMC Wednesday. In that case, watch out for this gap as a support 155.61. Under that, you will see a quick flush down to 152.48, this gap, and from there free fall back down to 148, and then from there much lower on Google. But as of right now, as of this moment, it's looking good for possibly going back up and filling this gap, at least in the short term, or retesting at least 20-day moving average right here, which is sitting right here at 161 or close to 161 on this daily time frame. So Netflix, another rejection at 700. We got slightly over 700, but then came back down to 688 and pretty much ping-ponging in between 20-day and this resistance here at 700 and the 20-day moving average at 686. You can see low for the day 688, came really close to it, went back up and trading just slightly under 700. So over 700, there is a breakout. We have seen that many times already, but it's not holding. So if you're gonna take any calls over 700, you need to see a full confirmation. Maybe this stock can hold at least a couple days over 700, and then you'll know that this is the real deal. And yes, we got the breakout. So far, I mean, all these breakout that we have seen in the past few weeks, they were fake breakouts, and then this thing pulling back again. And again, you can see today when over 700, then came back in. So 700 needs to break, needs to hold a couple days, and then you can play it possibly back up to previous all-time highs right here on Netflix. Under that level right here, 700, there will be strong support at 686.85, 680, and from there you could see a flush down to 667.64, lower Bollinger Band, and these two Bollinger Bands are squeezing. So I think soon or later, after some consolidation, you're going to see a big directional move right here on Netflix. It could be to the upside, or maybe we see a breakdown. We got a lot of gaps here on Netflix to the downside. So anything can happen with FOMC, and especially with first rate cut that is happening this week. On Nvidia, stock is down 1.95%. It was down even more early in the morning, more like 4.5%, 4%. And then we saw some recovery right here on Nvidia stock, went back up, but again under 117.85. And make things easier, I would say 118. So we need to get over 118. Nvidia needs to stay over 118 to make more progress back up to the upside. If not, we got high, lower high, and then another lower high right here. This is the perfect place to set another lower high before going down and possibly taking out this low. Also, I mean, this is a higher low right here. From this low, it's looking good, but in that case, we need to stay over 118, and somehow we need to come up to this range right here, 130, and over that, that's gonna be a breakout. So bull and bear scenarios are there, but like I said, guys, it's gonna be really tricky to actually sort this out before FOMC. We don't know what things are going to take place. There is a huge expected move for FOMC and for the week also on products like SPY ETF and Qs, and even on Nvidia. I think there is a big move. So right now, I mean, it's flat, only down $2, which we know that that's nothing for Nvidia. $2 down, that's basically nothing. So we pretty much got a flat day, only down 2%. That is not a big move to the downside. Nothing to be really think that Nvidia is crashing or anything. But concern here, is it gonna stay over 118? If not, yes, there will be downside, significant downside, can come back to 113, and it did today. Came down to 114, I think, low for the day. It can get down to 113, and from there easily down to 107. And we all know that under 107 there is gonna be a big flush. So Nvidia needs to stay over 118 to make this progress easy and back up to the upside for the bulls. And that's all I have for you guys in this video. Let me know your thoughts down below in the comment section, and I'll definitely keep you guys updated tomorrow night.